Welcome back to The Deep Dive. Today is Tuesday, January 27, 2026.
Big day.
It's a huge day. And honestly, I looked at the calendar this morning and I had to do a double take. Can you believe it's been exactly 5 years to the day?
5 years. Since the peak.
Since the absolute peak of the GameStop mania.
The squeeze.
The squeeze.
January 2021.
I feel like everyone has a memory of where they were when that was happening. Just the memes, the diamond hands, the sheer panic you'd see on CNBC. It felt like everything was turning upside down.
It feels like a lifetime ago in internet years, doesn't it?
Mm-hmm.
But the funny thing is, looking at the research we have for today, the echoes of that week, they're not fading.
No.
They're actually getting louder.
That is exactly the mission for this deep dive. We have a massive stack of sources today, and when you put them all together, they paint this picture of a completely transformed world. We're not just looking at stock tickers.
Oh, this is a power shift.
It is. So first, we have to look at how retail investors, went from being a joke to basically controlling the market.
Right. And then there's the AI arms race. You've got this rebel alliance trying to fight a $350 billion giant.
Yeah.
And then there's the government.
The government is the wild card. We have to talk about the Trump trade because it is picking massive winners and just devastating losers this week. And frankly, with the Golden Dome project and what's happening in Minnesota, the lines between politics and markets are they're gone.
Completely erased. I think the question we really need to answer today is, who actually holds the leverage in 2026?
Right. Is it the government, the tech giants?
Or is it somehow the individual investor?
So let's just dive right in. Take us back 5 years. The narrative in 2021 was dumb money, right? The idea that retail traders were just, bored people gambling stimulus checks and that they'd just go away.
That was the Wall Street consensus, 100%. The assumption was, okay, they had their fun, they squeezed a few hedge funds, but now they'll go back to their day jobs and leave the real trading to the pros.
No.
The exact opposite happened. I mean, if you look at the data we have today, retail participation hasn't just stayed steady, it's exploded.
Yeah.
We're looking at a report showing it's now hovering near 20% of daily trading volume.
20%.
Okay.
Put that in context for me. What was it before?
Before COVID, low single digits, maybe 2-3% on a normal day.
So we're talking about a 5 to 10 times increase.
At least. And that's just the average.
Mm-hmm.
On the really high volume days, when news is breaking, retail traders are accounting for 40% of all equities volume.
40%. That's almost half of the market.
It gets crazier. Look at the options market.
Okay.
Retail is driving 50% of options volume.
Whoa. Okay, we have to pause on that because that is such a crucial distinction. When retail buys a stock, that's one thing.
Right.
But when they're buying options, they're using leverage. They're amplifying their power.
Exactly. And that is why the dumb money idea is dead. You cannot call 50% of the options market dumb. It's just it's too big to ignore. That kind of volume creates what we call gamma squeezes.
Where the market makers have to buy the stock just to hedge themselves.
And that drives the price up even further. So retail isn't just riding the wave anymore. They are creating the wave.
Which explains this quote we have here from Tom Lee at Fundstrat. He says, retail investors were signals. They are difference makers.
Difference makers.
No.
I mean, that's a polite way of saying they can absolutely wreck your portfolio if you bet against them.
And Wall Street definitely learned that lesson the hard way, didn't they? You don't hear about huge short positions from hedge funds as much anymore.
No, and that's intentional. Hedge funds have had to scale back their short exposure. They are terrified of becoming the next target.
Right.
You can't just say, oh, this is overvalued and short it. You have to ask, is there an army of individual investors who like this stock? Because if there is, you are going to get crushed.
But who are these people? Is it still just 20-year-olds in their parents' basements?
Well, they've grown up, and they've come into money. This is the piece of the puzzle people miss. We are in the early stages of the great wealth transfer.
The boomer money.
Yep, the boomer money. We're talking about $120 trillion.
$120 trillion.
Passing from baby boomers to millennials and Gen Z. And we're seeing that first waves now. And this generation, they're comfortable managing it themselves.
I saw a stat from JP Morgan on this that just floored me. In 2015, only 6% of 25-year-olds were moving significant money from checking to investment accounts.
6%, okay.
In 2024, that number hit 37%.
I mean, that's a fundamental change in financial behavior. Yeah. And they aren't just buying memes anymore. That's the other big misconception.
Right. looking at the flows from this week, this doesn't look like GameStop. This looks like hedging.
It's macro hedging. Look at where the retail money is going. Silver just passed $100 an ounce.
100. And gold is over 5,100. I remember when 2000 seemed impossible.
And retail is just pouring money into energy stocks, especially after that strike in Venezuela. These aren't YOLO bets.
Yeah.
These are sophisticated plays on inflation and geopolitical risk.
It's so ironic, isn't it? A few months ago, during those tariff sell-offs, when the smart money, the institutions, were all panicking and selling.
Who was buying?
It was the retail crowd. They stepped in, they bought the dip, and they effectively bailed out the market.
They provided all the liquidity.
Yeah.
So, in this bizarre twist, the little guy has become the stabilizing force that Wall Street always claimed to be.
So the inmates are running the asylum, but the asylum's actually running smoother.
In some ways, yeah. But while they're reshaping the stock market, there's this other battle happening where the capital needed is just so high, the little guy can't play.
The AI arms race.
Right. You can trade AI stocks, but you can't build an AI company in your garage anymore. This is a game of empires.
And we have to talk about Anthropic. I saw the headline and I honestly thought it was a typo. They just closed a funding round. At what valuation?
$350 billion.
$350 billion. For a company that isn't Microsoft or Google?
Nope. It's a startup, a startup that's generating about $10 billion in revenue.
Which is impressive, don't get me wrong, but a 35 times revenue multiple, that is pricing in absolute perfection.
It reflects this belief that it's a winner-takes-all market. And look who's funding them. Microsoft and NVIDIA might be pouring in another $5 to $10 billion each.
It feels like the whole tech landscape is just solidifying into these massive feudal states. You've got the OpenAI Microsoft state and now the Anthropic NVIDIA state.
That's a great way to put it. It's a consolidation of power. But then you have this other group trying to break that up. And I love the term they're using.
Mozilla.
Mozilla, yeah, the Firefox people. They're trying to build a rebel alliance.
It's such a great narrative hook. Mark Surman, the Mozilla president, is really leaning into that Star Wars thing.
He is. He's trying to rally the open source community to build, trustworthy AI that isn't a black box controlled by some megacorp. Yeah. And they've got their own war chest at $1.4 billion.
Okay, but let's be real. $1.4 billion sounds like a lot of money to us.
Right.
But compared to a $350 billion company, that's not a war chest, that's a piggy bank.
It is David versus a very, very well-funded Goliath.
Yeah.
And the problem isn't just money. It's compute power. You need these massive data centers, these chips that are in short supply.
Exactly. You can have the best code in the world, but if you can't afford the electricity and the GPUs to run it, what's the point?
And that's the skepticism you're hearing from people inside this rebel alliance. Founders who say the analogy is fun, but, it's hard to fight a guerrilla war when the enemy has nuclear weapons. In this case, endless compute.
And there's another layer of difficulty for the rebels, right? It's not just about fighting big tech.
No, it's the political headwinds. The Trump administration has been very vocal about what they're calling woke AI. They've issued executive orders to challenge state-level AI safety laws.
So if Mozilla's big pitch is, we are the safe, trustworthy, ethical alternative, that might actually put them right in the crosshairs of the White House.
Precisely. If safety is interpreted politically as censorship or bias, then the rebel alliance is fighting a war on two fronts.
Big tech on one side, federal government on the other.
Yep.
Speaking of the federal government, let's pivot. Because if you want to see raw power in the markets this week, you just have to look at Washington. The Trump trade has entered a new, very aggressive phase.
Oh, yeah. It's moved way beyond just sentiment. We're seeing specific policy announcements instantly reprice entire sectors of the economy.
Okay, let's start with the winners. If you owned space or defense stocks this week, you are very happy.
Extremely happy. Look at Redwire, RDW.
No.
The stock just rocketed, 29% in one day.
29%? Why?
They joined a contract for something called the Golden Dome.
The Golden Dome. It sounds like something out of a sci-fi novel. What is it?
It's President Trump's missile defense initiative. The whole project is about $175 billion. It's basically a next-gen shield for the U.S.
And Redwire is on that contract.
They are, along with Palantir, Anduril, Lockheed. It's a massive $151 billion contract vehicle.
$151 billion. That is a staggering amount of capital.
It's a signal. The administration is saying defense tech is the priority, and the market is listening. The government checkbook is wide open.
But if you're in healthcare, That checkbook isn't just closed, it's being slammed on your fingers.
It was a bloodbath for health insurers this week. Humana was down 20%.
20%.
United Health down 19%, CVS down 13%. I mean, these are huge, stable companies losing a fifth of their value overnight.
And this was all because of a small policy tweak.
A tweak that cost investors billions. The administration proposed a 0.09% increase for Medicare Advantage rates.
0.09. That's nothing. That's basically flat.
It's effectively a cut. I mean, think about it. Nominally, it's a tiny increase. But inflation in the medical sector, wages, equipment, is running at 3 or 4%.
So if your costs go up 4% and your revenue only goes up 0.09.
Your profit margin just evaporated. The market was expecting 4 to 6%. They didn't get it.
That's just the danger of investing in a regulated market. The stroke of a pen can erase your entire business model.
Exactly.
There's another one developing that I find even more fascinating. The situation with Intel and the Trump accounts.
This is a really unique development. So the administration has this program giving $1,000 to kids born between 2025 and 2028.
A baby bond, basically.
Right. So Intel announced they're going to match that contribution for their employees' kids.
Which sounds like a nice corporate benefit. Good for Intel. But then you have to ask, who owns Intel?
And that's the kicker. After that $8.9 billion investment last year, the bailout, the U.S. government owns about 10% of Intel.
Okay, so let's trace this. The government owns 10% of a company.
Mm-hmm.
That company then uses its funds to match a government political program.
It's circular. The lines between public policy and corporate strategy they're gone. It's a form of state capitalism where the state's investment reinforces the state's political goals.
And that theme, the government actively managing the economy, that brings us to the currency, doesn't it? The U.S. dollar had its worst day since April of last year, dropped 1.3%.
And the reason is that the president, he just asked for it.
Right. And this is a huge break from decades of U.S. policy. We always wanted a strong dollar.
Always. It makes imports cheap. It signals stability. But Trump told reporters he thinks a weaker dollar is great. He wants it to help American manufacturing export their goods.
So he talks down the dollar, the market listens, the dollar drops. That helps exporters, sure. But for the regular person?
It makes everything you buy from abroad more expensive. Your phone, your clothes. It imports inflation.
Which brings us full circle to why those retail investors are buying up gold and silver.
Exactly. You have to connect the dots. If the president is actively trying to devalue the currency you hold in your bank account, holding cash is a losing strategy. Retail sees this.
They're buying hard assets to hedge against the very policy the president is promoting.
That's the feedback loop.
Yeah.
But, it's not just financial numbers moving the market. There is some serious social and political tension boiling over this week that we cannot ignore.
No, the market hates uncertainty, and there is a lot of it coming out of Minnesota.
The situation with Alex Preddy.
Yeah. The killing of Alex Preddy, the ICU nurse, by federal agents in Minneapolis. This has just triggered a massive crisis.
And the narratives could not be more contradictory. You have DHS Secretary Kristi Noem calling him a domestic terrorist, saying he brandished a weapon.
But the video evidence seems to show the exact opposite.
Right. And that disconnect is causing political chaos. Democrats are now threatening to impeach Noem.
And Trump is kind of walking a tightrope.
A very thin one. Publicly, he's defending her, saying she's doing a very good job. But behind the scenes, he sent Tom Homan, the border czar, to Minnesota to de-escalate.
You don't send in a fixer if everything's going great.
No, you don't. And the friction point is that the Department of Justice is reportedly not doing a civil rights probe. DHS is investigating itself.
Which is just fueling the anger. And the reason this matters to the market is that it could shut down the government.
We are staring down the barrel of a partial shutdown at 12:21 a.m. on Saturday.
Because Democrats are refusing to vote for the spending package unless they strip DHS funding over this.
So you have this volatility cocktail. Record highs in defense, a crash in healthcare, a devaluing dollar, and a government that might just turn off the lights on Saturday.
And in the middle of all of it, the Federal Reserve.
Oh, right, the Fed. Almost forgot about them.
Rates are going to stay flat on Wednesday, but the real drama isn't the rate, it's who runs the place next.
The betting markets have Rick Rieder from BlackRock as the favorite, a 48% chance.
And Trump called him very impressive. But there's a tension there.
Right? A huge one. Rieder's a BlackRock guy. He wants rates around 3%. Trump wants them lower. And Rieder values independence.
So Trump might appoint him to soothe the markets, but Ryder might not give him the easy money policy he wants.
Exactly. And to just add one more layer of drama, the DOJ served a subpoena to the current Fed chair, Jerome Powell.
Over building renovations.
Yeah. Powell called it a pretext for bullying. It's a clear pressure tactic.
So zoom out for us. We've covered a ton of ground. We have a retail investor base that is richer and more powerful than ever.
Right.
We have an AI sector consolidating into these massive empires. And we have a government that is intervening in the market in ways we haven't seen in decades.
It really challenges our traditional definitions. We used to talk about the free market. But look at the evidence. The Golden Dome contract, the Trump accounts, the managed decline of the dollar, government ownership of Intel.
The invisible hand of the market seems to be getting a lot of help from the very visible hand of the government.
That's the key takeaway. I think we're moving from a free market to a managed market. And in a managed market, success isn't just about having the best product.
It's about being aligned with the national interest, as defined by the administration.
Yes.
Which brings us back to that rebel alliance. If we are in a managed market where scale and government connections are everything, does a scrappy group of open-source rebels even stand a chance?
Or are they just fighting a war that was lost before it even started? That is the multi-billion-dollar question. And frankly, with the way capital and policy are moving, the odds are not in their favor.
A sobering thought to end on. As you watch the tickers this week, ask yourself, are you betting on the market or are you betting on the management? Keep digging, everyone.
Stay curious.